Since COVID, it's been a very challenging investing environment. Many of these families found themselves over-allocated to privates, not appreciating the liquidity premium that they were paying. They don't know how to run a family office, and they don't know how to say no to the principal because the org chart before, the principal sat above the balance sheet. Where in the family office, you need the CEO president to sit above the balance sheet, which includes the principal's balance sheet. Having a full-fledged internal investment team is very expensive. I think there's a growing realization amongst a lot of these families that maybe the direction they want to head in for this next cycle will be really allocating to outsource managers to manage, 80 to 90% of their capital.
Welcome to Prime Talks, where we're privileged today to host Brian Adams. Brian is a family office leader, a community builder, and a partner at Mac International. He serves on the boards of Serum Partners and co-founded Fortaleza and Somos 22, and he helped build 2 real estate private equity platforms. He also is a veteran as he hosts the Mac podcast, where he explores leadership, investing in the future of family office talent. As a former attorney, Brian brings a thoughtful, people-first lens to the questions of succession, governance, and just building greater teams, which is exactly where we'll focus today. Brian, welcome to Prime Talks.
Thank you for having me. Appreciate it.
Yeah. So before we get started and into some of the big ideas, could you just maybe share with us a little bit about your personal story and what really drew you into this whole world of family office leadership and talent, and whether or not there was a unique moment that sort of shaped how you think about this enterprise?
Yeah, absolutely. So just briefly, I'm from upstate New York. Originally went to school in New England, where I met my wife, who is from Nashville. We both went to graduate school in Boston. And like every Nashville native, she wanted to move back home. And moving to Nashville was easier than getting a new girlfriend at the time. So I went to Tennessee, and I've been here for 20 years now. I had no exposure to the family office space until, frankly, my wife, when we were negotiating our prenup, when she made her disclosures, I was given kind of a crash course in what that looked like. She's the oldest member of G2, and once we got married, I became an ex officio board member of her family. So I'm a non-lineal. But I started going to a lot of events and conferences with my father-in-law and our CIO at the time, and was plugged into the ecosystem through that. I actually met Linda Mack, who'll come in the story here in a minute, at an event probably 15 years ago. I spent a large part of my career before this as an attorney, and then I was a real estate sponsor. That's my YPO, qualifying business. And then I turned 40, and I got sober and really curious about what the next 10 years of my life was going to look like, and decided I didn't want to do real estate any longer, and spend a lot of time just talking to people, a lot of YPOers, my forum mates, and went through this kind of exploratory journey. And through a series of serendipitous connections and introductions and conversations, got reconnected with Linda. She was looking to bring in a junior partner, the future leader of the firm. And I was looking to do something different, but I wanted to be in the family office world. It had been something that I'd been on the periphery of, and I wanted to go deeper. And she was looking for somebody that didn't have a search background, because she has a very specific way that she does things. And so it worked really well. And now I'm a partner and very involved in the business, and have built all these other communities and ecosystems adjacent to Mac, which I'm sure we'll get into. But yeah, that's kind of how I found myself here today.
Oh, it's interesting. So, Brian, you recently published an article on 2025 talent predictions in family offices, and you talk about leadership transitions. You speak about the rise in alternative allocations, and perhaps most notably the surge in outsourced roles like a CIO, like an OCIO. So can you walk us through what's driving that shift, and what are some of the biggest pros and cons of outsourcing this role as opposed to keeping it in-house?
Yeah, so investments in particular, I think there's a number of factors that are all converging and a confluence of things. One would be, frankly, we find ourselves recording this at the end of 2025. Since COVID, it's been a very challenging investing environment, frankly, at least in retrospect, right? I think many of these families found themselves over allocated to privates, not appreciating the liquidity premium that they were paying. And there hasn't been many exits. And so the turnover and the return of capital has been really slow relative to past cycles. That's one. The second piece would be just this generational succession planning that we're seeing. A lot of these bigger multi-generational families, the baby boomer generation is retiring. The way that they invested relative to what the next gen thinks their investing profile should be are very different. And frankly, just the market in general, the public markets have performed so well the last 20 years that when you do a look back, net of fees after tax audit on performance relative to a benchmark, it's very tough to beat that. And so I think there's a growing realization amongst a lot of these families that maybe the direction they want to head in for this next cycle will be really allocating to outsource managers to manage, 80 to 90% of their capital and get market returns in a tax efficient manner. And then picking 2 or 3 areas where they have deep subject matter expertise, where they feel like they have idiosyncratic leverage or deep conviction on, and putting their risk capital there, either with directs or having a GP intermediary sponsor type program that they can allocate to. And the other piece would be just given where the world is today, having a full-fledged internal investment team is very expensive. It's probably in the order of $5 to $10 million, I would say, a year, in order to keep that team running. And unless you have an operating company giving you fresh capital, if you don't have those cycle returns, if you don't give deal people fresh capital and to do deals, they will look elsewhere. And so I think that's why you're seeing a lot of lift outs and spin outs, and GP seeding is a really nice way to say, we no longer want these people internal. Let's try to let them be entrepreneurs and see if they can make it elsewhere. I think that's just where we are in the cycle. So I know that was 5 answers to your question, but I think those are some of the factors we're seeing in play.
No, I think that's fascinating. I mean, and just given that evolving role of the investment function within family offices, other than whether or not they have fresh capital, how do you make that determination, or what would prompt you to recommend somebody to go out and build their own family office versus engaging with an outsource model or multifamily offices? And in what cases might a hybrid make sense? Like, how do you think about the signals or thresholds, or what is it else that you look for in those recommendations?
Yeah, and I promise I'm not pandering to my host here, but the other component I think in play is the third party service providers have really gotten a lot better in the last 10 or 20 years in terms of, it used to be institutional platforms that were OCIOs or consultants or portfolio managers. They were focused on institutional LPs, and then families were kind of secondary, right? Now there's very robust platforms that are just oriented towards family offices. And so the third party kind of counterparty world has changed dramatically, I think, in terms of performance, customization, reporting, and the level of service being given to these families. And I think there's also just the efficiencies of scale within those third parties. In other words, the pricing and the fees have gone down dramatically, which directly increases performance, right? And families are evaluating all of that. What we always say is, I think it's a very healthy exercise, and one of the most valuable things that a third party independent CEO, president of a family office can do is, on a rolling basis, revisit all of your internal and external relationships. In other words, run an RFP, do a market exercise, do a market mapping, do a roadshow experience share with other families, and really dig pretty deep Does it make sense for us to have investments in-house any longer? Should we investigate doing external and third party, and really understanding the returns, the performance, the level of service relative to what the cost is and the fees? I think that should be something that's evaluated every 7 to 10 years in the investment world. It's just a healthy exercise to do as a fiduciary, in my opinion.
And how do you avoid the ego? How do you ego vanity factor? Because that's very calculated and thoughtful.
Well, I think the reason that CEO presidents of family offices get paid, one of the toughest skills to find in somebody, and they have to be very thoughtful and professional about it, but one of the most valuable things that those people do is the ability to tell the principal, patriarch, matriarch, etc., tell them no. And say,
absolutely,
you may want to do this, and I totally appreciate it, but in my opinion, it's not the right thing to do. And again, I think what you're seeing is a bucketing of, hey, why don't we just have this be your risk capital? We can do whatever we want with it. We can continue to invest in privates and directs or venture. But within this broader ecosystem, we're not going to put the whole portfolio here or the whole corpus of assets. But yeah, I mean, that's the nuance, and that's the skill of having a really high performing CEO, the ability to have these tough conversations with folks that have direct oversight of you. It's a healthy thing, I think.
But you find that a very difficult thing to find in a CEO.
Well, I mean, I think a lot of cultures of family offices do not inure themselves to the ability to say no. And that's why you see such service creep and scope of service. There are many family offices where, if a family member asks for something, you just have to say yes and figure it out.
Yeah, I think that's incredibly common. As someone who used to be a professional in a single family office, I can definitely recognize that dynamic was at play all the time because, incentivization drives behavior. And so if a professional like myself were to say no too many times to a principal, you would be afraid that at some point they're just going to say, look, I don't think you're the right fit for this role.
100%. And it's interesting because when we talk to de novo newly created family offices, there's always 3 big elements we explore. 1, let's identify the clients being served. It could be all the lineal descendants. It could be the significant others. It could be the partners in the operating company. The second piece would be the scope of services. What are we going to be? Holistic, full service, only administrative, an investment firm. And then based on those 2 pillars, you get to, okay, well, what are we going to have insourced and what are we going to outsource? And once you have those 3 pillars, you can really put together a business plan. Mm-hmm. You can have a P&L and a budget. Many first gens just don't want to do that. They don't want to go through that exercise. But if you talk to multi-generational families, 5, 6, 7, they know those answers really cold because otherwise they wouldn't still be existing. Mm-hmm. And the ability to say, this is the value proposition of the family office. These are the scope of services being provided. If you want to do these other things, we will help you, but that's a household level decision. That's not what the family office does. You have to build that culture and be very, very intentional around it.
Mm-hmm. So beyond investments, what other trends are you seeing in terms of insourcing versus outsourcing? And in relation to that, I'm curious why a first generation creation of a family office, why they would be more resistant to do this kind of exercise in detail.
So I'll take the second question first. Why would they be resistant? I think the bigger challenge is they've probably worked so incredibly hard and they've taken such idiosyncratic risk to allow themselves to create that level of wealth. They don't want to limit themselves, which is a totally understandable situation to be in. And it's hard for them, I think, if you're 30 or 40 or 50, to understand that you're setting a precedent that will be, hopefully endure beyond your generation. I just think it's a challenging thing from a psychic perspective. And probably they're going to go back to being an entrepreneur, right? I mean, that's kind of what got them there. That's what they know. That's what they feel comfort with. And oftentimes what you see is a mistake they often make. They bring in people they trust from the operating company to run their family office, the CFO, the general counsel, and those people are great. They're good at what they do. They are trustworthy people, but they don't know how to run a family office, and they don't know how to say no to the principal because the org chart before, the principal sat above the balance sheet. Where in the family office, you need the CEO president to sit above the balance sheet, which includes the principal's balance sheet. It's very hard, I think, to turn that mindset. Your first question on what else is being insourced, outsourced, increasingly in the States, at least, we're seeing an orientation towards really deep tax expertise now being leveraged internally. In other words, there's a realization amongst a lot of families that the investment folks talk about return in 100 basis point, 200 basis point terms. Tax people think about return as 10, 50, $100 million savings on capital. And it's just a very different galaxy of impact that can have long term. And so we're seeing more and more people want strategic CFOs with tax expertise coming in-house, not just liaisoning, but really telling the third parties, hey, this is the strategy we want to implement. These are the directions we want to go in, and having a much more strategic executive role.
And
that makes sense.
Yeah, I mean, it's interesting as I'm just thinking about the preponderance, as you said, to hire somebody from the operating company, or sometimes accountant, a lawyer, whoever it may be, right?
Or a rock star from another family office who you think is great, but is not a culture fit. Yeah, it's a big mistake. Yeah.
You know, it's interesting when you have family office heads that are former CFOs or former CEOs of the operating business or whatever it may be. You know, does that ship get righted in any typical way, like in terms of the mandates that you're seeing, or is that going to be a generational problem typically?
I think it's more of a generational problem in terms of the scope of services for, call it a first generation family office started in the 80s or the 90s, was much more typically administrative and supportive, right? It was a place where professionals went to end their career. Mm-hmm. It was like a sunset cruise.
Right.
And it was about getting your K-1s done correctly and making sure the bookkeeping was done, and maybe some concierge. The role has become much more dynamic now, where especially younger people like YPOers I'm seeing who are having events or even pre-event, they want embedded family office people to help them think through their liquidity planning, because they understand now that that role can allow them to club up with other families, co-invest, find new opportunities, next-gen development, education, be external facing into the marketplace, which before was largely not a consideration for families. It was the opposite of what they wanted to do. Now we're seeing branding and PR and very much outward facing family office professionals representing the principal in the market for whatever the need might be, typically capital allocation. And so I think it's not as big of an issue. I think there's a growing education and realization around the fact that these people are their own subject matter experts, and it's not a portable skill. I think a generation ago they thought, oh, well, a CFO of a widget company can figure it out.
Right.
There's a lot more complexity these days.
Yeah, absolutely. And, you know, just before we get to the topic of next generation and succession, which I actually think is interesting, you know, I did want to ask you, you know, we keep hearing about virtual family office, and that seems to be coming up, especially with sort of newer wealth creators. Is that a model you're seeing gain momentum? And if so, like, what does that even mean to you? And what drives a family to go virtual versus traditional?
It's a term that gets thrown around a lot, and I think it's kind of lost a lot of meaning, in my opinion. I'm not really sure what it means any longer, but what I think it means and what we are seeing more of is again, kind of going back to my earlier comment, the service provider industry has gotten a lot better. And so I think you're seeing more people say, okay, well, I can run this family office in maybe having 2, 3, 4, or 5 people total, and then relying on and liaisoning with some really good third parties. I don't have to have everything in-house. I can outsource quite a bit of this, and I can defray my overhead costs. And so we're seeing a bigger realization of that. The challenge is it means that the people internal, the depth of their expertise and the breadth of their expertise has to be fairly dramatic if you're expecting them to really be able to know about tax, accounting, reporting, tech, investments, estate planning. Those people are harder to find. They're more expensive. So ultimately, does it save you money? Maybe. It saves you brain damage from an org chart perspective. And that's sometimes what they're solving for, is they just don't want to manage that many people. But it does mean that the folks that are internal, they have to have deep sophistication across all the facets of wealth management.
That must be really difficult to find. I think when you talk about tax planning, estate, investments, reporting, all of that.
That's why it is hard. I mean, all kidding aside, I mean, the work we do, it's to find all of those, to your point, Sylvia, about the technical skills, and then the culture fit, and then the relocation, and the timing. It's a lot of things to line up.
Well, you've also written about how there's this trend of next generation becoming more visible, more active in their roles in the family office. So what are you seeing are kind of the skills and the mindsets that the next generation needs to master to be effective in those roles?
Definitely seeing much more external, outward facing in terms of their willingness and comfort level with saying that, I am the children of XYZ patriarch or matriarch. I do think that there's a big challenge in that they need to get involved early, in my opinion. And there should be an understanding. There's a difference between giving them a voice and a vote. There's a lot of great ways to give them a voice very early on with very low stakes before they get a full-on vote. But, I think the family office is now becoming a place where next-gen education, governance, and next-gen development, it's just part of the scope of services. And that's the direction we're heading in.
And when you look out in that scope of services, right, as you said, the professionals are becoming better and better, right? The third-party advisors, consultants, and so on. What do you see as kind of the most critical third-party functions that you're typically seeing that are rarely being executed with exceptionalism within the family office?
Anything tech related. It's, it's one of these things that everyone talks about it. But it's such a challenging area to get your arms around, and it's moving so quickly. Having a full-blown internal, I rarely see internal IT staffing unless it's a shared resource with an operating company. We do run into folks that do have IT internally, but a full-time like CTO or a cyber person, those people are just hard to find and very expensive. So you'd have to be a massive, I think, institutional level family office to justify that.
And as you mentioned earlier, that families are becoming much more visible in public, and even creating crests and brands and websites and so on and so forth. In that evolution, what kind of support do you think is critical that a lot of families do not typically get?
Hey, we're seeing more families be interested in having somebody either be a named or in practice chief risk officer. It could be the general counsel, it could be the COO, it could be the CFO, but somebody that understands the whole risk spectrum, everything from insurance to physical security to cyber to reputational risk and management. And that's becoming part of the purview of a lot of these roles is to understand how everything works together to avoid catastrophic failure. And I think especially for international families, the physical risk and the cyber risk is very real.
Yeah. And this is kind of a pivot of a question. So I'm just curious in terms of how you see things that are on the softer side of the equation, for example, like the values of the family. How do you see the value sets being transferred from one generation to the next most effectively? Because as you know, a lot of our research in the family office world shows that that's actually one of the most important aspects to preserving wealth over generations is inside of those values.
Yeah, 100%. It's very hard to do that when there's no operating company any longer, when there's no kind of shared commonality of ownership or entrepreneurship or origination story. And so we're seeing a lot of families go full cycle, and to what we were talking about earlier, maybe allocate some capital to being a direct owner or control investor within an operating company, if nothing else, to give that glue to keep the family together. There has to be some type of in-person shared experiences or shared story, in my opinion, for it to endure long term. It's a big challenge, and I think that's why you're seeing, chief learning officers or outsourced kind of consultants come in. And I always say that, when I have a search or a mandate and I'm able to tell the market what the family's value is or what their mission statement is in one sentence, is extremely powerful. And the cool thing, go ahead.
Can you give us an example of a mission statement that you think is really effective?
Oh gosh. Some of them are secret. I mean, not really. Let's see. You put me on the spot.
I mean, if something doesn't come to mind, that's great. I just thought it might be useful for some of our families to hear examples of great mission statements.
It doesn't have to be verbatim. Just directionally. What are you seeing? What are you hearing?
Yeah, okay. So there was a great family we worked with in Chicago to help them find a CFO, like a name of a family that most folks would know. Incredible people, a true pleasure and privilege to work with. The principal and everyone there, very highly effective, high functioning family office. And their mission statement and their value proposition, it was that they were entrepreneurs and business builders helping entrepreneurs build businesses. They viewed themselves as first generation entrepreneurs, and everything about their investment thesis, their governance, their structure, the entire spectrum of services was about trying to help the next generation of entrepreneurs build the next business. And it was really powerful. It was great. And it showed true when you talk to everybody. And I think when you have the ability from everybody, from the person who works in the front desk all the way through the principal, when you ask them, like, why are we here? And they all have the same answer. That singularity of purpose is a real superpower for family offices, because as opposed to an institutional platform has different stakeholders, and one quarter to the next, they may have a different direction they're heading in, or they rebrand. Families can just go top down and say, hey, like, this is what we're doing. And if you get buy-in there, it's extremely powerful to have everyone oriented towards one direction.
Interesting. Yeah.
That's a great example.
Yeah. And I would think actually companies would be simpler in their mission because, everybody has like P&L and balance sheets, and it's like, direction of travel is up and to the right. Whereas for families, it's really all over the map in terms of what they're trying to achieve with their family offices. So I think you probably have more versatility, more variability, but also more complexity in articulating that mission statement. I want to go back to what you said earlier. You said that one of the things you're seeing is a lot more, and certainly something we're seeing and experiencing, a lot of families kind of co-investing with each other. And that's like a little bit of I call it a divergence from, a CIO that's going out and building some kind of strategic asset allocation slash balanced portfolio, whatever else. How does it reshape the internal structure of a family office or for a CIO or for an investment team in your experience?
It's a different skill set to try to recruit for, namely because in that world, in all family office space, but especially if you want to truly set up a co-investment platform and a syndicate platform and be the first phone call, that just takes a huge amount of trust. And we're seeing families that want to do that, kind of helping them think through, okay, you need to find somebody who, when they open up their phone and they call these people, they answer, right? Other families, other CIOs, other family principals that are active. That just takes a huge amount of time. To some extent, it is portable. But in the ecosystem of family office, even though it's expanding, reputations are very real and people know. And to be able to have the first phone call, not only do you have to be able to have that right off the bat, you also need to have a budget that allows for pretty extensive travel and entertainment. Like you've got to really pay for this person to be on the road, go to events, be a part of communities, be a part of networks, host things. It's not just, oh, we also do this. I think you're seeing more families that really want to be focused in that area. They're building offices that are meant to host events, or they're putting budgets and marketing and business development in the line items themselves. And I think that will continue because there is just a huge amount of appetite for a lot of the newer families to be able to invest directly with other families.
Brian, just to expand on your answer a little bit, where are some of the higher caliber events where families really are meeting one another? I mean, we certainly host the Prime Quadrant Conference every year, and that is one of the places where I get great feedback from families. But what else is out there that our families should be aware of?
Yeah, I'll take the opportunity to be just atrociously commercial and talk about some of the things that I've been doing with my YPO4 mate, Tim Brown. About a year and a half ago, the two of us had just come off of the conference circuit. It was May, and we were worn out from 6 months going around. And we had this realization that, all these families we talked to, all these people we knew, we had the impression that content was degrading in value in a lot of ways. People could access it asynchronously, just with multimedia options. Every time I'd gone to a conference recently, when I was having that sit down, when the PowerPoint would go up or when the fireside chat would start, everyone would pull out their phone or they'd run to the lobby to go talk. And I talked to families all day, every day. When I asked them, how could I help you? Even the really big institutional sized families, they would always say three things. Capital, like on some level, they all need capital to keep going. Counsel, they all want wisdom. But the biggest thing was connection. And so we created a community around connection capital where it wasn't vendor driven. It's not sponsor driven. It's not content driven. It's all about how can we create safe harbor, experience share opportunities to deepen connection amongst true peers. And it's gone extremely well. I mean, for Somos, which is our events platform, we hosted 1,354 unique family office contacts across 53 events this year, and have 3,000 people that have opted into the community. For Fortaleza, which is kind of a YPO for family offices, we have 30 members now, and continues to grow dramatically. There's just this huge need, I think, for connection. People just want to go really deep. They want to understand what other opportunities and challenges people that look like them have. But it is hard. I mean, I think the traditional conference model, and especially just given the growth of the family office ecosystem, there's a lot of people out there that they're trying to put things on, and I don't know. I
And
think
they're
it's
yeah, and
challenging.
they're not well, no, and they're not high quality. So I think it's a real issue. And I know that Mo and I are often invited to speak at family office conferences, and by and large, my experience is that they're either overrun by vendors, um, or they're not really family office professionals. They're people that want to be associated, or they're not principals, I should say. They're people that want to pretend that they're family office
Yeah,
principals, and you see quite a lot of that.
yeah, and like there's the time and place, right? So I think there's some great service providers who do incredible events, right? Tax, accounting, law. And that content is really helpful and useful for subject matter experts that work and have technical capacity within these family offices. But to your point, Sylvia, we looked around, and I love being YPO. It's a great organization. It's really oriented towards family business owners and entrepreneurs, which is great. Tire 21, it's great for principals who have had an exit or are trying to understand what the next chapter of their life looks like. Well, what I realized was after placing people within these roles, I would get a call from a CEO or a CIO of a multi-billion-dollar family office, say, "Hey, Susan, Bill, how's it going?" And they say, "Oh, it's great. We're super happy. Thank you." I said, "Well, what can I do to help you?" And they say, "Well, I want to join a community and organization where I have the ability to meet people who look like me, have the same problems, have the same opportunities, but I don't have time to do anything that doesn't have a great return on my investment." And what I thought, what was a real learning experience for me being in the search business was those roles are probably some of the loneliest, most isolated roles in financial services. You're being pitched constantly. You don't know who to trust. You can't talk to anybody about anything you do because of the confidential and discreet nature of your job. Nobody wants to really, in your personal life, hear about complaining of having to deploy $100 million of capital into the lower middle market. And within the organization, you're probably at a choke point. You can't really complain to your principal. You can't go down, and there's probably not that many on your same vertical. So where do you go to have, real conversations? It's a very lonely job. And so we're trying to help solve for that and just get people to have real, open, honest, confidential conversations with others in the space. And it's really had a dramatic impact.
Yeah, and I think that in general, family office roles are challenged in a variety of ways. I mean, some of which is, around upward mobility or the nature of incentives and that don't, where professionals can't participate the same way that they can in a growth company or whatever. So that actually, like, a lot of times we've seen that manifests itself in compensation needing to be higher, in a single family office construct and almost in any other sort of commercial construct. Do you see that as being generally true? And also, it would be great to get your thoughts on how compensation models have evolved for family office executives and some of the big shifts that you're seeing around comp and incentives.
Definitely seeing comp go up across the board fairly dramatically. I think part of it is just generationally. If you want somebody with, call it 20 to 25 years of experience and 20 to 25 years of runway, which is kind of maybe around my age-ish, there aren't that many of us. I mean, family office is obviously a growing industry, but still a very nascent one. And so finding people that have 20 years of direct single family office experience and subject matter expertise within tax, accounting, investing.
That's a real unicorn.
Yeah, they're hard to find, right? And then you've got to also extract them from what is probably a really good opportunity that they're currently in. So I think that's one factor. And so I think, to segue into your second question, what you're seeing is compensation and structuring start to reflect not only the the obtaining of that talent, but the retention of it. So more deferred compensation, more long-term incentive plan, more co-investment participation, more carried interest, more profits interest sharing, whatever it looks like, because it's really hard to find them. And then when you do, you've got to keep them. And then I think the market is starting to realize that these people will leave unless you kind of take care of them.
And what do you think is sort of differentiates like the profile of an ideal modern single family office leader as opposed to a multifamily office executive?
Can I ask a clarifying question?
Sure.
Independent boutique multifamily office or a private equity backed, publicly traded?
I would say a boutique.
Yeah,
Okay.
let's go with the boutique.
I would say the big differences there would be on the boutique multifamily office side, and I have limited experience here. We don't really do a ton of search in that space every once in a while, and I do have some connectivity there. But my impression is that there's still a pretty good variability of client size and complexity. So you've got to be able to code switch between a client that's a $100 million full service, like you're doing everything for them, first generation entrepreneur, walking the dog, doing portfolio management, helping them negotiate their prenup. But then you probably have a separately managed account relationship with $1 billion family where you just have a sleeve of their capital, or you're deploying towards one investment strategy, or you're doing their bill pay and taxes. And so, again, in my experience, somebody that really has true business judgment and knows how to run a P&L, knows how to have kind of budgetary responsibility, and has that business acumen of, okay, we can do this, but we need to charge that, as opposed to a single family office where success can be, hey, I want to have market neutral returns, but I want everyone to come home for Thanksgiving. Like, I don't think the multifamily offices have that capacity to do that level of service necessarily, because there's different constituents that they have to serve, and they've got to constantly be switching back and forth and understanding, okay, that's this family, that's the other one. There's nothing, there's no judgment associated with any of that, but that's my impression.
It was interesting. You needed to clarify and make the distinction between a boutique and a private equity backed. Why was that an important and critical distinction for you?
I think we all have appreciated as we get through life that equity drives incentive, and incentives drive behavior.
Yeah.
And I think one of the biggest questions that everybody should ask, be it in the family office or the multifamily office, is show me what your Schedule 1 looks like what's your cap table, who owns what, and how do people get paid? Because in my opinion, that's what drives behavior.
Yeah, I mean, I couldn't agree more. So we've seen some single family offices starting to evolve into multifamily offices, where they're serving outside families. So, what's your view on that? And I guess I would also differentiate, some are offering just a sleeve of their expertise and raising capital into, say, maybe an area of domain expertise where they can deploy the capital, as opposed to single family offices that are truly becoming full service providers for multifamily offices. So do you think it's a smart move, and when does it backfire?
Yeah, it's interesting. I think on a couple levels. So one, once you get to a certain stage of, you look at what Rockefeller platform is doing, what Laird Norton has done. I don't know those folks directly, but from the outside looking in, it seems like once you get to a certain progression of households being served or generations, the business model of having a single family office just kind of breaks at some point, where your linear returns of portfolio kind of intersect with the exponential growth of the family, and it's no longer a viable proposition to be able to manage the overhead. And so you can wind it down, you can divest the assets, or you can defray your costs by bringing in outside capital. And I think that's just the decision that some folks have made of, hey, we have a good business here, we know what we're doing, but we just need to increase our AUM somehow. And when we can't do it organically, or we choose not to do it organically, we're going to do it through external forces. And I think that can make a lot of sense. The challenges there are fairly numerous. I mean, one, I think it's hard to call it a family office when they don't operate under the family office exemption any longer because they're a regulated entity in the States, right? So I think that's what the challenging on the MFO side is. One of the benefits of a single family office is you're an unregulated entity. You don't have to report. Whereas once you become an MFO, you have to file with the SEC and you have FINRA and you could have a broker dealer. And again, there's nothing wrong with any of that, but you have to make certain disclosures. Like we can all look up the ADV for certain firms and find out a lot of information about them. I do think you're going to continue to see a growth and a continuation of boutique multifamily offices, especially because there's such a desire for co-investment. It can be really hard in practice to be able to pick up the phone and raise that capital in 30 days. And so having some kind of internal pooled, even if it's a pledge fund or a vehicle to allow you to be competitive in the marketplace deploying capital, I think that's a big driver, right? And so you're starting to see hybrids where there might be a single family office entity that does a lot of the tax, administrative support services, but there's an external entity that is a participatory regulated firm that invests capital on behalf of the family. I think you're going to see more and more of that. The M&A world, when it comes to the publicly traded and private equity backed multifamily office and RIA space, is really dynamic and interesting right now. Continue to see huge amount of activity. And I think it's going to continue. How that story ends, I don't know. We'll have to find out.
And interesting. One of the things you said earlier was that, or at least one of the domains that a family should be cautious in entering is the technology side of the equation. So what I'm curious about is when you think about the kinds of talent that you're asked to engage in today and the kinds of talent and then the evolution of talent within family offices, how is AI or technology affecting that, if at all? What is the impact that you either see today or anticipate seeing as we go forward?
I mean, almost every search that we do, when we ask the client to give us like the ideal candidate profile, or, hey, if we were sitting here 3 to 5 years from now, what would be the big 2 or 3 things this person would have accomplished to be successful? Tech is always one of them. And people just kind of throw the term around. I'm not really sure what it can mean sometimes, but I think what they mean is general ledger and investing reporting and transparency and dashboard capacity. And they're not necessarily looking for somebody to be a technologist, but they want them to be savvy enough to know, okay, this is how we're going to put together our cap stack internally. This is how we're going to make it secure. And this is where we're going to know how to make sure that everybody's getting the information in the format that they want and need in a timely manner.
Interesting. And so when you're thinking about tech in your, maybe let me paraphrase what I'm hearing, is that AI doesn't actually matter nearly as much in the single family office context in terms of search as it may in other domains, or am I misreading that?
I don't know any family office that's actually leveraging AI, other than how I use it, which is, as a layman, it's very challenging because unless you have a really trusted technology service provider that you believe is truly ring fencing your information, you can't just let that into GenPop. I mean, you can't let your trust documents out into the world. They have to be protected. And so I think that there's maybe people misusing it, but until they fix the security features and there's comfort there, the information is so sensitive, I think, to be truly applicable for what these families need to solve for. I think that's why you still see at the end of the day, like manual reporting when it comes to a lot of the general ledger and investing side.
Yeah. So let's take go back to your bread and butter. You're doing searches on behalf of families. Could you give us maybe some situations, examples, maybe heuristics or even best practices, like when those searches go really, really well, what defines those? And when they go sideways, what defines those? And I'm going to assume that you did everything in your power and qualitatively you put the best candidate forward, but it still went sideways. So what distinguishes those two kind of extreme scenarios?
It's interesting. Search is one of the few, it's one of the few jobs left that's truly an apprenticeship. And, you know, I just hear Linda's like words in my head. It's just, she always says there's three things you need to do to execute on a search. One, you've got to have the ability to calibrate on the ideal candidate profile so well that you can't miss. Like if you've got the bullseye down and everybody can say the same thing about what they're looking for, that's one. Two is the ability to access qualified, actionable candidates that meet that profile. And the third is the ability to execute the search in a progressive manner. What I often see when searches go sideways is when we thought there was shared calibration around the ideal candidate, and then at some point in the search, the goalposts shift. That means that we no longer know what we're looking for. And most of the suffering in search occurs between expectation and reality. And when I present a group of candidates that are expecting one thing, and then when the reality is something different, that's when we need to pause and reset. And that's when searches take more time. I mean, we always get it right, but you're tacking on another 100 days potentially.
And so it sounds like a lot of your early work is more self-discovery for the individuals, because oftentimes they don't necessarily even know what they want, or they will gutturally, viscerally tell you what they want without really unpacking whether or not that kind of individual comports with their broader realities. Is that a fair statement? And if so, how do you navigate that?
You nailed it. We always tell people, especially first gens, I have an email in my inbox now. We just launched a search. Where are the resumes? Like, you know, they want to move fast, and I get it. Like the reason they made the wealth was probably because they were a super fast adopter, fast twitch muscle, make calculated risks really quickly. And I totally understand the mindset. Unfortunately, for search, if you do it that way, it'll ultimately take longer than if you just take the time up front to do the work. And to your point, Mo, I think a lot of people are scared to actually have these open and vulnerable conversations about what they want. And we do these holistic 360s. So when we do a search, we talk to everybody in the family office organization, all the external service providers, independent board members. I've talked to dog walkers, boat captains, pilots, drivers. Those are often sometimes the best conversations, honestly.
I was just going to say, I would love to be a fly on the wall when you're asking those questions.
Yeah, and these are all Chatham House rules, right? So total confidential. Because the idea is I don't judge, I just need to know. Like if the reality is, the principal's a 24/7 like entrepreneur and she's going to email you at 2 a.m. and you need to respond. It is what it is. Like I can't pretend that's not true. I just need to know because it dictates who I bring to the table. So that early work is so important to really understand. And one of the things that Linda and I do is we insist on going to the family office, the physical, like where they actually work, because it makes a big difference if you work in Midtown Manhattan or Soho or Wall Street, or you're in the suburbs of Westchester or whatever it is. Like that's a reflection of your values and what the office looks like, where it's located, the art on the walls, how it smells, how it feels, like how people dress. The culture fit is the hardest part to get right on family office. And that's the real difference between institutional search, I think. I've never done it, but If you're searching for a hedge fund manager, it's just about return. Like they could be a horrible person, but if they hit their numbers, it's all good. Like everyone's happy. It's not how it works in family office. If you don't get along with the principal, I'm not saying you have to be the same type of person, but if there's not vibe there, return is irrelevant. Like this is just not going to work. And so that's the early work that we do that is so hugely important to get it right on the back end.
So if you're advising a family right now who's going to hire their first head of family office, what would be the top 3 traits that you would tell them to prioritize?
So, I mean, call me. No, just 3 traits that I would. Yeah. So I think the 2 biggest things that keep family office principals, patriarchs and matriarchs up at night, one would be, can they truly trust their advisor to be doing the right thing for them and their family all day, every day? Like, can they really trust them? The second thing is, am I going to screw up my kids? So when you kind of reverse engineer that, I think it's trustworthiness, character, and then the big one is service orientation. And that one's tricky because you could be a really good professional, but in family office world, as you all know, Sylvia, you've been in the space. Like if you're not cool with getting the phone call on Saturday night that Johnny got a DUI and you've got to bail him out, and you think, well, that's not my job, I'm the CIO. It's like,
hey,
you're
that
not,
doesn't work.
like, you're not going to work. You need to be the chief cook and bottle washer. And if you got to go to UPS to pick up the package and you're the CEO, like you've got to want to do that. And not just like you want that phone call. You know what I mean?
Yeah. I was going to say, not just that you're like, okay, I guess I will. You should actually enjoy that kind of engagement. Like there's something about, you want to be in the bear hug of the family and you want to be that kind of person that likes being in that bear hug.
Yeah. So we look for traits like, I love people that played team sports in like Division 3 or Division 1 sports that you're never going to go pro in, right? Because you just love being part of a team. Military service, Boy Scouts, Girl Scouts, Eagle Scout, things where what energizes you is being in service of others. Like that's just what gets you up and going in the morning. So much more important than the technical skills.
I'll give you a little feedback as a female who's been in the space. You just said athletics, Boy Scouts, and what was the other one?
Girl Scouts.
No, nobody's a Girl Scout. Come on, those are all.
My wife's grandmother helped start the Girl Scouts of America.
I was a Girl Scout, but it's not really.
Were you a brownie or a Girl Scout? Be honest.
I was both.
Okay.
I had the badges. I had all the things. I don't think that really formed who I am as a character. So you might want to find some filters that are a little bit more feminine friendly in there.
Well, I mean, we recruit a lot of female athletes, so
Yeah, that's true. I mean, what's really interesting around all of those is that as you were talking, I'm thinking, wow, that's the talent pool that I love to hire from for any business. Like it's, people that will be of service now. I've never ran a hedge fund, and nor do I intend to. So I guess that's a different orientation. But it's interesting. I mean, I think so much of what actually makes somebody an exceptional professional leader in a family office context is often similar traits that will make somebody exceptional in a service business. And in a way, you're just running a highly concentrated service business. Or so it seems. Yeah.
So Sylvia, maybe to go a little bit deeper there, I mean, one of the things that I always try to gauge early on when I interact with the candidate for the first time is with a live mandate, are they curious at first or they just talk about themselves? Like, do they use a lot of I statements? Or do they use kind of plural, like, we want to do this? What are they trying to solve for? What would we be able to do together? Because if it's the ego pitch off the bat, it's probably not going to work,
So for you, a red flag would be somebody who comes in with a lot of self-importance and is basically wants to hear their own voice more than being curious about what the family's needs are.
Yeah, if they talk more than I do every 20 minutes, 15 minutes, they should be asking me like a million questions. And the big question that seasoned family offices professionals ask are, what's the culture of the family? What's the governance structure? And what is the legal entity organization? Because what they're trying to mitigate is principal risk, which is a real risk in the space. Like, principal wakes up one day and says, I don't want to do this anymore, you're gone. The three questions that most people ask when they're new to the space are, can I work from home? What's the title and what's the comp? Those aren't the right questions to ask.
Interesting.
Great guidance.
Yeah. I know we have like a minute left. So maybe could I actually, Brian, this has been fascinating. Could I throw a couple quick laser round questions your way?
Let's do it.
And just whatever comes to mind first. So for starters, the one role you think every family will have in-house in 10 years they don't today?
General counsel.
Ooh, okay. What hire do families wish they made 5 years earlier?
No, COO.
Okay. Favorite interview question you ask candidates?
Oftentimes, so self-awareness is a really big factor in my opinion, because it allows you to code switch, which is really important, I think, for dealing with families. And so oftentimes 10, 15 minutes into a conversation, I'll ask somebody, how do you think this interview is going so far? And like, it's a pretty loaded question, actually. Answers are highly variable, but it's a good one.
And if there was one guiding principle you'd want families or maybe next gen leaders to really remember when hiring for their family office, what would it be?
I mean, this is self-serving, but these professionals should be viewed as a return on investment and not a carrying cost.
Interesting. That is great. I mean, Brian, thank you so much for taking the time to join us. This has been a fascinating conversation.
Thank you all for having me. It's been great.
Yeah. And just before we wrap, if somebody wants to reach out to you, they want to learn more about you, they want to connect with you about a prospective search, where should they go?
Certainly macinternational.com. Check out the website. I am aggressively, painfully active on LinkedIn. If you message me, I will respond to you. So happy to talk to anybody.
Fantastic. Thank you, Brian.
Thank you.
Yeah. Thank you all for having me.